In a world of endless possibilities, where success is the destination, there is one guiding force that sets you on the path to greatness. Introducing Honors Way Group, your strategic partner in achieving growth and unlocking your true potential. With a proven track record of excellence and over 400 years of combined experience, Honors Way Group is the leader in commercial real estate, dedicated to driving results. But what sets us apart? It's our unwavering commitment to understand your unique goals and challenges. We purchased the $6 million 23 acres in South Denton, which has doubled its value in the last year and is now worth $12 million. We will be breaking ground in just a few months and build 450 Class A luxury garden style multifamily units.
Appreciate your listening to our presentation, and thank you for paying attention to all of the former presentations as well. We've got a great afternoon coming up, and you're going to want to watch Paul Montalongo at 4:30 as well. Make sure you set aside some time for that. This is our presentation on the Prestige at Mayhill. My name is D.L. Campbell, and I am the owner and lead developer on the Prestige at Mayhill. We are building 450 Class A luxury multifamily apartments in the heart of Dallas. So today I don't have anything to sell you. You can just take your hand off your wallet. I'd like to be able to have our team get to know you, and we can get to know, you can get to know us as well. We're here to serve. We are here to give some commercial real estate education. I have 19 years of commercial real estate education, development, construction, investment. We're going to talk about passive investing versus active investing. We're going to talk about the deal makers and also those who just want to make money. I'm having a hard time seeing these slides. I'm going to turn. So the advantages of passive investing are that you don't have to go out and find the deals. Try to find a good deal right now. It's tough. You know, even in Dallas, you cannot find a good deal. Some of the deals that are available are in marginal areas. Out in Salina, which is an hour away from jobs. Okay, so our property, if you want to do some due diligence, is the Prestige at Mayhill. It's right in the middle of Dallas. We're serving 3 job markets. This is a very normal market. So I'd like you just to get used to this market. A couple of years ago, we had a lot of syndicators making a mess of the market, and they were buying anything because interest rates were low. It was a really weird market for me. But try to just get used to the feeling of this market. You're going to have to analyze 50 deals to find a good one. You're going to have to analyze 100 deals to find a stellar one. So just get used to this market. Yes, interest rates are too high, but they'll come down Q2, Q3. And right now, owners are holding on to their properties, and if they're good properties, they're cash flowing. If they're mediocre deals, they're stuck in the middle of a bad deal, and that's where death comes, right? Death comes in the middle of a deal. They are trying to get a refi going, and they're not able to. They're having to use a bad word in the middle of a refi, and that's capital call. That's a bad word. So we want to make sure and pass on those opportunities and make a good decision about where you're going to spend your time and your money, or your family office's money too, and their time, because they're taking time analyzing a lot of deals that should be passed on. What do you want to be looking at? You want to be looking at both the jockey and the horse. The jockey being the team. So we have over 400 years of commercial and construction experience in our team. 400. We're not 10 kojikis with 2 or 3 years of experience. We have a lot of depth of experience. We want to be looking at the horse. We're serving 3 job markets. If you want to analyze a good deal, look at the prestigeatmayhill.com. Just as practice. You know, you don't have to take it any further than that. But just as practice. Our internal rate of return is over 30. So that's a good deal. And why? Because we're forcing value on the land. We own the property. We purchased it in June of 2023, put those entitlements on there, and we have doubled the property value the first year like we do on all our properties. So right now the property is worth $13.5 million. It has $8 million of equity to attach to. It has $8 million of equity to attach to. And we've already raised $5 million in private money. Friends and family, now we're doing a 506c. We're advertising and we'll raise another $15 million for the capital stack. We're also offering collateral on the property. So we put our investors right into the property. You can't get any closer to that equity than that. That's a good deal. You're not going to find that. So I would say be picky with your deals. Some of the mistakes that the passive investors make, they don't trust the sponsorship team. And you know what? I get that, especially with the syndicators having messed up the market like they did over the past couple years. A lot of marginal projects that shouldn't have been purchased, and now they're in trouble. But look at your team and really be careful, be choosy. Sometimes the financial advisors don't have all the education that they need to make a good decision. And we have a great YouTube. It's an hour YouTube on how to make your decisions and how to do commercial due diligence. It's the Prestige YouTube. We've got a lot of free education for commercial, and please feel free to like and subscribe to that channel. And we also passed out, Rochelle passed out for us a one-pager on how to do commercial due diligence, because it really is on you. You know, and we're the ones who have egg on our face when the operators don't perform. So we want to be real careful, and I'm stepping back and giving a lot of commercial education these days because I really want investors to have safe, secure returns, a place where they can shelter their funds, have collateral, be investor owners, be partners. We recommend Quest. We have distributions that we're paying out to Equity Trust, Quest, Madison Trust, Directed IRA, a couple more. But if people have self-directed IRAs or 201ks that are losing money in the stock market, hey, commercial real estate is half as risky as the stock market. So I recommend get their funds out of the stock market and shelter them in a commercial property that doesn't walk away. This is a picture of our track record. You know, we've got 400 years of commercial real estate experience and construction experience. This is 22 North, and we just did another updated video on our YouTube of our sister property, and it was recession-proof. So who wants a recession-proof property type? Anybody want a recession-proof property type? We saw retail fail. You know, I never thought I would see retail fail, and it still hasn't popped back, has it? So our recession-proof property type is Class A luxury, multifamily. I'm telling you, it's not my favorite. Multifamily is not my favorite deal, but everybody needs a place to live, and our tenant type makes it recession-proof. Our tenant type is the 30-something professional who is building their career. They're not sitting around saying, hey, how am I not going to pay rent this month? You know, we're not going to get stuck in that rent moratorium. The Supreme Court told the CDC that what they did was unlawful with that rent moratorium, telling tenants, hey, you don't have to pay for a year. Of course, we didn't know what was going on, did we? No, now we do. So even though the Supreme Court told the CDC that they can't do that again, Congress could. So we have to watch out for that. We have to use our vote to tell Congress what to do. but we also want to pick an asset class that is recession-proof. Our tenants are 30-something professionals. They're building their career, they're paying their rent. As an aside, I only saw rent specials on 22 North one time during the pandemic, and that's the worst microeconomic and macroeconomic situation we've had. That was a great stress test. Talk about a stress test. So this is 22 North. This is the common area, Class A luxury, 3-story walk-up, garden style, luxury multifamily, beautiful asset. Sold in 2021 for a profit of $22 million. Everybody's happy. So we want to look at the financials. We want to look at that stabilized year one budget. Are the expense ratios in line? For a new build, you probably want to be looking at a 25% expense ratio as compared to your gross rents. Look at their pro forma. Look at the first year, third, fifth, seventh year. And in our underwriting, we used ultra-conservative bank underwriting. We didn't use the 2% vacancy rate that Dallas has. We used the full 7% that the bank wants us to use. So ultra-conservative bank underwriting. And when the economy shifted, when that market shifted, we were like, okay, we expected that, so we're still under the safe zone. We're still under that umbrella of safety. Okay, we expected that. Our numbers are still good. Everybody's sleeping well at night, and we have happy camper investors. So we want to be looking at that. Again, this is the common area in our beautiful sister property in Northwest Austin. Now, Dallas is a market of its own. It popped back from the pandemic in February of 2021. I was speaking to about 300 investors in Orlando, and everybody from the country was saying, oh my gosh, we don't have our retail and our restaurants packed again. And we had our traffic jams in Dallas. We had our restaurants full. We had all of those great key indicators that the market had already popped back. So 22 North, we have a deep dive review that's also available to look at. It's about 30 minutes. And it's a beautiful Class A luxury, and it's not my taste, right? We don't care what I think. We want to know what our 30-something professionals are wanting. And this is the color that they like, they love, and our tenants will stay 5 or 6 years. So we don't have that expensive turn every year or every 6 months of a Class B or a Class C. Our tenants will stay about 5 or 6 years. What are the SEC's goals? Well, y'all may know this, but they do want to provide good deals, and they do want to protect their investors. So we've got that private placement memorandum that people can read as they go to sleep that says everything that is going to go wrong with the property. But they also want to provide good deals for people to invest in. So we want to remember that, and we want to be giving them the good deals. Again, common area of 22 North. We closed on our property, the Prestige, in June. And we're owners. We're not syndicators. You can tell I'm not a syndicator. I'm not a sales guy. Yesterday, we walked a couple properties with our general contractor. We had a good afternoon in the breezy Dallas weather, and we had fun. And today, we've got our geotech happening at 2 o'clock. Tomorrow, we're going to be meeting at the property again with general contractors and co-development partners, our architect, our engineers. We're owners. So also, if you would like to come to the property, it's 5201 Parr Drive. We're going to get together at 11 o'clock, and I would invite you to change your plans. Come and take a look at the traffic impact, the medical district, the medical office buildings along Colorado. It's right in Denton, South Denton. So our tenants are not going to be the students of Denton. It'll be the professors. the doctors, the nurses in the area, and we're serving 3 job markets. So I would invite you, if you'd like to come to a sidewalk with us, 11 o'clock tomorrow, change your plans. 5201 Parr Drive, get with Rochelle or with Christy, and they can assist you with that. And we also have a 1-page investment summary. Got a couple of those, we don't have very many. We're accredited investors. I'm going to wrap this up. And if you'd like to learn more, please take a picture of the QR code. It'll take you right to a little landing page where you can opt in, and you can watch a 30-minute deep dive with some of our partners talking about all of the development experience that we have. So I appreciate you guys. I appreciate your taking the time to listen, and thank you, Neil, for having us again. And we just enjoy spending time with y'all. Thank you.
Thank you for joining us on this journey with Honors Way Group, where success meets innovations and possibilities become realities. At Honors Way Group, we believe your success is our success. That's why we are committed to delivering exceptional results. We're proud to have partnered with incredible people like you and witnessed their growth and achievements firsthand. Our team of dedicated experts, and did I mention that we have over 400 years of combined experience, is always ready to go the extra mile and drive measurable outcomes. Take the next step in your success and visit honorswaygroup.com today, and let's work together.